Hello, I'm Greg Gilles, the editor of Unquote, and I'm here today at the IPEM conference in Cannes, and it is my pleasure to be joined by Barret.
Good morning.
Head of sponsor coverage at Crédit Agricole CIB.
Yep.
Pleasure to have you with us today, Stéphane.
Thank you, Greg.
It looks to be a very, very promising conference, very busy. Everyone is in a good mood. And I'd just like to start by asking you, obviously from the private equity side of things in Europe in recent months, it's actually been a really busy time.
Very busy.
It depends a little bit on the various geographies, some of them a little bit better than others, and I'm sure we can get into that, but what's your take on the recent month in the market?
Sure. Listen, what I would see is that private equity investment funds have become a full part of the economic environment today. You're going to see them in all regions, all sizes, all sectors, okay? And that is really a footprint where you see the alternative investors have really become a must-have for investments, for overall investments. Alternatives is close to 20-25% of allocations, as you know quite well. What we've seen is that we at Crédit Agricole, we really want to be the house bank of investment funds in Europe, whether it be for the M&A part, advisory, buy side, sell sides, IPOs, to the smaller size, accompanying a venture capital fund that is putting money into a growing company, we'll put the financing in place, to all the services. We're very big on services. My partner Bruno is really big at CACEIS. We do equity bridges, we do facilities, we do depository services. Everything that a fund needs is clearly where we're going to be, okay? Now 18 I think was a very good year overall. There was a few ups and downs on the debt side, but we all got across it. I think the main drivers of 18 was the equity capital markets are really not there. The windows are too small, really too small to be able to capture. And so today, sponsors are looking for another sponsor to pick up their place, or a trade. But the equity capital markets is really not an alternative that you can count on, that's number one. I think leverage has reached a peak for all industries, whether it be infrastructure, private equity, I think it's reached somewhat of a peak. And so what we're seeing now is, and that's what we're going to see, I expect to see in 19, just to preclude your upcoming question, I think a lowering of the prices. I think sponsors have all been expecting a crisis, including myself, to be quite honest. We all thought at one point there'd be a sharp break, and it hasn't happened. There was some sliding in June, sliding in December. The sharp take has not taken place. Everybody has funds that they've raised already in premonition of the upcoming slide, hasn't taken place. So now what's happening is you see a small erosion on prices, on deal flow. Deal flow is getting tougher. Prices are coming down. So with that, people are getting more cautious. So you see a cautious private equity environment. But that's not a good enough answer. You still have a lot of money, and you have to deploy it. So if you want to deploy it, you're going to have to find new ideas. And that's where 19 comes in. And I'll be waiting for your next question to tell you where.
No, absolutely. Tell me, obviously there is, as you said, a lot of dry powder that's been raised.
A lot of dry powder.
And LPs, I mean, liquidity is better now for funds, and we can go into the various liquidity solutions, etc. But still, the core investment divestment cycle, it needs to be there regardless. Private equity likes to pride itself on not being cyclical.
Absolutely.
But they still have to face that sort of thing. Where do you see the main opportunities, and where do you see, it could be in terms of geographies, in terms of sectors, where do you see GPs being most successful at deploying in the next 12 months?
Number one, on the liquidity issue, so they've all raised the fund. The issue now is that you have to rotate your fund quicker. But on your okay assets, okay and above okay assets, if you have a really good asset, you don't sell it. Because your opportunity cost of trying to find the same thing outside is hardly impossible. Your odds are really bad. So what sponsors are doing is they're keeping the very good assets longer, and they are returning into them by coming in with a new fund and a minority position to sell the business, okay? So on the price assets, that's why deal flow is coming down and prices are coming down. Price assets are not coming up to the market, and they're only coming up for a small portion. So that's a key point on liquidity. The issue on the second point I would mention on liquidity is that co-investors are plenty around, so size is not an issue. Size is really not an issue.
And debt is plentiful.
Debt is plentiful. That's what you saw last year, pretty big deals. AkzoNobel, RPC is probably coming up this year. So big deals are not a problem. Small deals take a lot more time, so you try to shy away from them. But local players have a good market on the local side. In terms of sectors, FIG. FIG is the sector sponsors are jumping into. Why? Because they all expect that the banks, the insurance companies, there's some fat around there.
I will ask you if that's the case, and what are your plans for the next 12 months?
Trim it up. And so basically it's a bit uncharted territory. It's more difficult to get in. You need a bit more experts in the insurance sector. And so there's less competition. So because of that, sponsors are spending more time on insurance deals, insurance-related deals, all that part. So FIG for me is a big sector, which I see a lot of growth. Tech, mature tech, not startups, because that's a different land, but mature tech, software for banks, software for more established industries. There you see a lot of growth, 30, 40% growth, and so you can pay a bit more, and you can put some leverage, but you can see you have a winner coming out. But it has to be a proven company, not spearheading everywhere, but so that's where I see more the business. In terms of geographies, stick to your principles. Don't go outside where you don't know what is happening. So stick to Europe, stick to the US, some Asia. But the growth has not really been in Asia, unfortunately. But for example, Middle East, you have to be a Middle Eastern player. We all saw Abraj, unfortunately. If you're not there, you're not going to play. That's what we see.
Excellent. Well, thank you very much for that, Stéphane. It was
You're more than
great to
welcome,
catch up with you, and thank you very much for watching.